Hey, welcome back to The Dive. Today, our guest will dive deep into the temporary debt ceiling extension, raising rates, the Chinese real estate market, and uranium, gold, and silver all being in attractive positions. He is a longtime precious metal investor, financial advisor, market analyst, and author. Peter Grandich is joining us today. But before we bring Peter on, just a quick reminder to tap that subscribe button for me, please. Hey, Peter, welcome back to The Dive.
Always a pleasure to speak to you.
Same to you. Okay, so let's begin with the most recent political news. The House of Representatives has passed a debt ceiling extension into early December. Do you think that this whole debt ceiling process is a redundant exercise?
Yeah, it is because they probably violated it a couple hundred times already. It's like drawing a line in the sand and saying, okay, we can't go past this line, and they keep going past it. The whole concept of it originally was to make sure that Congress stayed within its means, which is long ago disappeared. So uh, the talk of saying to remove it makes some sense because no one really pays attention to it, and they wouldn't have to go through this ritual. But it certainly is gets people concerned. But as always, in the 11th or even the 12th hour, they come to some sort of term, and I expect that in December as well.
Mm-hmm. Okay, so we're hearing more Fed officials comment that inflation is not transitory. Do you think we will start to see the Fed raise rates anytime soon?
The Federal Reserve is in the catch 22. Let's not forget it wasn't too long ago where they said not even to worry about inflation. Then it was transitory. Now it's special circumstances. I think we have to understand, and they can never come out and say exactly what something is. It could ruin the market. So they're always going to err on the side of the cup being half full versus half empty. But I think what you have to understand is the genie's out of the bottle. Most people, over half financial advisors have only been doing what they do since the last financial crisis. They have no concept of what it's like to not only handle a crash, but what inflation really is, because we've been in a disinflation environment. That's gone. And one of the areas where that always hits first is in the bond market. So I think interest rates will rise, not because the Fed wants them to rise, because they really don't, but the natural course, because when you start to see 4 and 5% inflation and it's sticking around, and somebody's only paying you 1 or 2% to tie up money for 10 or 30 years, eventually you demand more. So there's no question that it's more than transitory, and I think it will impact the bond market more than it will impact the stock market, at least for the foreseeable future.
Mm-hmm, makes sense. Okay, so moving on here. Do you think American investors should be concerned about the Chinese real estate market?
I think they should be concerned about China, period. Listen, they're on equal terms almost, both economically and more importantly, militarily. There's an old saying, if you talk to people in the Navy, it's been around for a couple hundred years. Those who control the seas control the world economy. And we're seeing a lot of rattling by the Chinese military now. I think one of the reasons is they're trying to take away some of the eyes in China looking at their own internal issues. China's going to have to make a decision pretty soon. It's either a communist country or it's a capitalist country. It's very hard. They've been getting away with it to be both. And so I really think that I like to say to people, when China sneezes, a lot of the world catches a cold. Listen, they carried us through the 2008 financial crisis. So I think it's a big investment mistake not to take in what's happening in China to your own investment decisions here in North America or elsewhere. So I think whether it's their real estate issues, the fact that they have tremendous debt problems, and they also have, some other internal problems that have shown they're going to try to seek the fastest way out of it, and that is to try to defer people's eyes elsewhere. And that's why I think the military situation, particularly with Taiwan, is not something we can overlook and need to watch more carefully.
Mm-hmm, trying a look here, not there kind of thing. Okay, so switching gears here. We often hear you speak about American Pacific Mining Corp. Why have you invested here? What can you tell us?
Well, I'm fast approaching 40 years in and around the investment arena, and I'm certainly in the twilight of that career and that of my life. And I'm not going to speak anymore after this company publicly about individual stocks. It's just a decision. I'm not an advisor anymore, and as much as I like to, I'm past it. But having learned the hard way and having lost more money in junior resource stocks than I ever imagined as a young man I could make, it's ironic that here at the towards the end of my career, I finally found the one junior that hits all the check marks for a classic play in the junior market. It has superior management, phenomenal projects, and a great supporting cast. The supporting cast really kicked off for the company is when they were able to convince Michael Gentili to become a major shareholder. Michael Gentili is somebody that I searched for decades that I never could really find, but he clicks all the buttons too. So my view is, and it's a personal thing more than anything else, is that if I'm ever going to take a big shot, especially towards the end of my career, take it on something that shows it has all the earmarks. And we're at that point now. In the next several weeks and few months, all this great pre-news of initial drill exploration results, phenomenal deals going on, big investors showing up. Now payday is the next several months, and obviously I'm optimistic that that payday is going to be a good one.
Awesome, me too. Okay, so in your most recent Pete Speaks, you mentioned that gold and silver are in an attractive position. Do you think gold and silver are about to turn the corner here?
Well, it's really so again, going back to how long I've been doing this, I learned again the hard way that it's not how much we make, but how much we stop ourselves from losing, which will separate the winners from the losers over time. And when I look around at all the possible sectors to invest in, I'm not a gold bug, but gold and silver was really the only sector left that offered, I thought, undervaluedness. Even uranium had moved a lot, something that I was very bullish on for the last couple of years. So I really think that's the one market, gold and silver, where one can focus for on capital appreciation, not just as a defense, but on offense. And I, can't believe how, given how strong the metals are, how strong the mining major producers are. For the first time in my lifetime, they're actually producing excessive free cash flow, and yet they're being priced very low. And the junior market has been priced to non-existence. There are juniors now that I think are selling less for value than when gold used to be 350. So I really like the gold and silver market for capital appreciation. It's the only area that I'm investing in for any time soon. And I really think the major mining companies in particular probably offer the best value now in the entire stock market.
The last time we spoke, you mentioned that uranium is in a perfect storm. Do you think that this momentum can keep running? And do you think we will see a change in attitude towards nuclear power?
Well, at least here at the end of my career, because of what I've said about uranium in the last 2 years, I'm going to at least get the blind squirrel award. And that is even a blind squirrel finds a nut or two in it every so often. And uranium really proved to be a phenomenal find. The only way I can describe it is I emphasize that I backed up the truck on it. I really thought, and it wasn't me that originally discovered it. It was somebody I originally heard, and then as I researched more, the things we were speaking about 12 or 18 months ago are now playing out before our eyes. The world is waking up that there's an acute energy providing crisis, and that inevitably nuclear energy had to play a major role in it. And the reverse in the psychology of it within the last 6 months has been tremendous. And we've seen that in the shares. I still believe it has a long way to go. If I wasn't so overly pessimistic about the general stock market and a fear of a big financial bubble bursting, I would own every single share I might have owned 6 months ago. But because they've done so well and they've doubled, tripled, and quadrupled, and the fact that I want to get cash as my single largest position, I've taken profits in them. But I believe that if you have 2, 3, 4 year horizons, they're still going to be a lot higher 2, 3, 4 years from now than where they are now, because the uranium price only has one place to go, and that's up.
All right. Well, thank you so much for joining us today, Peter, and sharing your updated thoughts with us.
Well, thank you, and God bless you. And thank you to all your listeners for taking the time to listen to both of us.
Thanks so much for tuning in today. We'll be back again tomorrow with more great content, so stay tuned by hitting that notification bell.